Good evening, one and all. We welcome you all to the national webinar on financial literacy, discipline, markets, risks and management, a multidisciplinary skill under NEP 2020 in collaboration with Sri Holistic Health Foundation India and Sri Research Institute Center for Art, Sciences and Wellbeing, and also in collaboration with Association of Mutual Funds in India. We are happy to invite you all and welcome you all to this national webinar on financial literacy. And on behalf of the organizing team, I welcome Association of Mutual Funds in India and also all the participants to this national webinar. And without taking much time, I would like to introduce today's speaker and welcome today's speaker, Sri Suryakant Sharma ji, Senior Consultant, AMFI. Sir, Suryakant Sharma ji is a postgraduate in Commerce and Law with specialization in Corporate Laws. He is also Chartered Associate of Indian Institute of Banking and Finance. And Sri Sharma ji has over 35 years of experience in banking and finance and securities market and had initially served in leading financial institutions. Thereafter, in Department of Financial Services, Ministry of Finance, and Government of India, and finally in SEBI. Sri Sharma ji joined Securities SEBI in 2003 and served in SEBI for more than 16 years. Awareness programs have been conducted by himself, and he himself has addressed as guest speaker in more than 600 IAPs in collaboration with, in association with AMFI. So Sri Sharma ji is also a member of the working group of NCERT for developing vocational course on mutual funds for the students of 11th and 12th classes. Sri Sharma ji is also a recipient of Excellence Award from a leading trade body for promoting mutual funds in India. Sri Sharma ji is also a mentor of few NGOs working for financial literacy and investor awareness in the country. After superannuation from SEBI in 2019, he has joined Association of Mutual Funds in India, an apex body of mutual fund in India, as senior consultant for spreading financial literacy and investor awareness across the country among citizens. Since May 2019, Sri Sharma ji has interacted with lakhs of investors and potential investors, that is students, through more than 1,000 investor awareness online webinar and on-ground physical programs across the country in reputed government organizations, research institutions, leading educational and professional institutions, corporates, startups, women-centric NGOs, and others. So on behalf of Sri Holistic Health Foundation India and Sri Research Institute Center for Art, Sciences and Wellbeing, and also on behalf of Association of Mutual Funds in India, we welcome you, sir, for your session. We apologize for the delay due to technical issues. So over to you, sir, for your session. Thank you.
Thank you, Dr. Ravindra. I am honestly delighted and very happy to be with you and all your colleagues and participants in this webinar of course, through this platform. But I would love to meet you and come to your city also when I visit Hyderabad next. And we will definitely in your collaboration do a big program of investor awareness for different segment of the society, or we may not limit even one program. We can do more than one if you are comfortable, because you are working for the society, and so we can do more than one as per your comfort in Hyderabad.
Sure, sir. You are always welcome. And we will be more happy to organize more such programs. In fact, that is the need of the hour. Even United Nations is emphasizing on life skill, and even NEP also made it an essential skill. So we are very fortunate to have you on this platform to listen to you and gain much knowledge with all our students, faculty members, and staff. Over to you. Thank you.
Thank you. Thank you. So nice of you. So today's topic is financial literacy. And Dr. Ravindra, you will appreciate that we are mostly academically literate, but majority of the even academically literate person may not be financially literate. And top of it, most of them will not admit it. That's the paradox. That most of the people say, oh, no, I know everything. I will manage my personal finance. And rather, people don't discuss their personal finance with others. Sometimes they are scary. Sometimes they have misconception that people will know what I have and all these things. But my dear participants, and particularly young participants, through Dr. Ravindra, I want to tell you that we have to understand the concept of managing personal finance. And that is very, very, very important, because the world has changed. Dr. Ravindra has also mentioned about the United Nations. Every forum, every country across globe is now emphasizing that individuals should manage their personal finance in most efficient manner. That is why this financial literacy is the need of the hour. Then definitely Dr. Ravindra might feel surprised. Why is this program for my students, for your faculty members? Sir, I say the contrary, that it is their need. They most need it. Even faculty members, I am surprised, because Dr. Ravindra, I have been doing such programs across country. I have done more than 1,100 such programs in most of the reputed education institutions, professional institutions, trainings, government departments, NGOs. I feel that people are not giving as much attention to this as they ought to. So, and I will try to make my session, Dr. Ravindra, very simple, in a very simple. I will not make it a technical session. I will not make, because that is not required. Now everything is available on Google. Luckily, we are living in this era. Rather, we are flooded with the information. But my session will be more motivational. I will try to motivate youngsters particularly. What is the need of financial literacy and how we can manage our personal finance. So, my dear friends, to begin with, I will ask Dr. Ravindra, I think he might agree with me, that money is very, very, very important in our life. Very important. We should admit it very honestly. Because without money, there is no life. For every day in our life, we need money. Or rather, for bigger things in our life, Dr. Ravindra, we need huge money. And that not on one occasion, but rather regularly or continuously, we will be needing money in our life. So, my dear friends, first, please understand and appreciate the importance of money in our life. Early we appreciate, better it will be. Because Dr. Ravindra, there are two ways of learning in life. One way, which I feel is more easier, is to understand the mistakes of others, which other people have done. I have done a lot of mistakes in my personal finance management. I will keep telling you during my session. And second option, which is sometimes costs very much, is that you make mistakes, learn it and go ahead. But in that process, you might suffer a lot. That is why it is relatively easier that we should learn from the mistakes of others, and particularly Dr. Ravindra, of my generation. My generation has made tremendous mistakes as far as personal finance management is. Of course, the era was different, time was different. I appreciate that things were different at that time. But even Dr. Ravindra, I'm talking about the middle class people only. I'm not talking about the wealthy people, or not talking about the rich people. They have got their advisors, they have got a lot of battalion to manage their personal finance. But I am more concerned about the middle class, but more so of the salary class person. So first thing we should understand and appreciate is money is very, very important in our life. And from where we get money normally, Dr. Ravindra? The major source of primary source of money for all of us is whatever we do. If we are in job, we get salary. If we are in business, we get profit out of business. If we are in a profession, we get professional fees. So there is a primary source of money for all of us. Of course, your students might not have today, but they are going to have it down the line after 1 year or 2 years when they complete their degree and their courses, and they will also start earning. So what I want to tell you, that there is a prime source of money for every individual, and whatever he does, he gets money. And that is the prime source of money. And Dr. Ravindra, sorry, I will keep taking your name again and again, because I want you to be with me. That's the only purpose that I will keep taking your name. So whatever we earn, whatever the prime source of money, that money, rather majority of money goes into taking care of our regular expenses, normal expenses. Majority of it, maybe 60%, sometimes 70%, maybe 80%, 90%. But majority of that money goes into taking care of our regular expenses. But Dr. Ravindra, we are very, very fortunate that we are Indians. I tell you with pride that we are Indians, because Indians has got totally different DNA or blood, whatever you say. And what is that? Whatever we are earning, maybe 10,000 or maybe 10 lakhs, every Indian, and for that matter, every Indian family, try to take away as much money as possible out of their income. We try. Sometimes it is not possible because there may not be good income, or the family might be large, or maybe some other obligation. But every Indian and every family sincerely try to take away as much money as they can, which they don't want to spend. And that money, Dr. Ravindra, in a common parlance, we say savings. It is called savings. And we should be proud of it, my dear participants. Indians are still one of the best savers in the world. That should be a pride thing for all of us. And it is not today, Dr. Ravindra, for centuries together. That is why we were wealthy as a country. That is why we were wealthy as a nation. Because saving was in our blood. We were best savers. And unfortunately, again, I am limiting myself to middle class salary class person, Dr. Ravindra. We were savers, but we did 3 mistakes with regard to savings, which I feel students should not make. The first and foremost mistake which I made, honestly, I admitted, I literally lost first 4 or 5 years of my career when I started earning. I didn't save. I was very casual. Let it be. I have 30, 40 years to go. I will start saving when my salary will go up. If I save a small amount, what is going to happen? These were the thoughts in our mind, in my young mind at that time. But that was a blunder on my part. Because the loss of first 4 or 5 years cost me very dearly in future. So the first thing I want to tell your students particularly, and even young faculty members, is start saving right from the first month when you start earning. And never shy of saving a small amount, maybe 100 rupees, maybe 200 rupees, maybe 500 rupees or more than that. What is important here is that we should start saving from the first month. Second thing I want to tell all of you is be regular in saving. I was not regular in saving. I started saving at the behest of my parents or some good advice from relations, but I was casual. I did saving for a few months, then I just forget. Again, after 4 or 5 months, I thought, oh, I'm lagging behind somewhere. I again started saving. Then again lost in the between. That casualness cost me very dearly. This was the second thing I want to tell you. Be regular in saving. Every month you have to save. Amount of saving might differ because the circumstances will keep changing every month. But you should be regular in saving. And the third and last thing about saving, my dear young participants, that is keep increasing your saving with the increase in your income. And Dr. Ravindra will agree, every year we get some increment if we are in job, we get increase in our package. Even when we are in a business or business being settled, I start getting more profit out of it. Or even in profession, I get settled down, I get more professional fees. So my income keep increasing every year. And with the increase in income, we must increase your saving every year. And a thumb rule is there, a golden rule is there. If you can follow, that will be great of you. That is, keep increasing your saving minimum 10% every year. Minimum 10. Suppose this year you are saving 1,000 rupees a month. Next year, Dr. Ravindra, it should be 1,100 rupees a month. And third year, it should be 1,210 rupees. Incremental increase in saving every year. I know it is not so easy, but it is not impossible as well. And Dr. Ravindra, I keep telling in my session, every individual must do some things which are tough but not impossible. Because that will brighten your personality as an individual. So third thing I want to tell you, keep increasing your saving every year, and if possible 10% incremental increase. These three things, my dear friends, looks very normal, ordinary things. But I want to tell you with confidence and with experience that these three small things will change your financials across your life. After 10, 15 years, you will have huge money in your hands. So please do religiously follow these three small things about saving. Now the next question arises, what to do with the savings? We save, we will save. What to do with the saving? There are two options. And again, my generation choose the first option, which was a blunder on our part, Dr. Ravindra, I admit it very honestly. And what was the option? We saved some amount. Of course, the salary was not great at that time. Families were big, but still we saved. But what unfortunately we did, we simply kept our saving in a box at home. Or put it in a some and deep in some hidden box. And you will surprise that was a blunder on our part. Because my dear young friends, keeping saving at home, Dr. Ravindra, I use a very harsh word, and that is a crime. Keeping saving at home is a crime and it is a crime against yourself, it is a crime against your family, and it is a crime against our society as a nation as such. So please never keep your savings at home. Of course, some emergency fund is a different thing. Every family keep 10, 20, 50,000 emergency fund. But even now that is not required because Dr. Ravindra, we are living in UPI era. We are living in net banking era. We are living in credit card era. So that is not required. So please never keep your savings at home. Then what to do? Put your saving into one or other product. And the process of putting your saving into one or other product is called investment. So you have to invest your savings. Investment is second step, Dr. Ravindra, and saving is the first step, because unless and until you save, what you will invest. So what I want to tell you is saving is primary and rather first step. But you must not stop at the first step. You must upgrade it, graduate it to the second step, that is investing your saving. And my dear friends, I don't know whether Dr. Ravindra will agree with me or not. The purpose of investment is very simple and distinct. And that is, my money should also start earning money for me. That's the only purpose of investment. That's the only purpose of investment, that the money which I have saved and the money which I have invested should earn money for me. And my dear friends, a day did not come in my life. I don't know whether it has come in the life of Dr. Ravindra, but a day will definitely come in the life of young people like you, where your investment will start earning more money than your regular salary or your regular income. But my dear friends, it will happen not today, not tomorrow. It will take minimum 15 to 20 years. That is why Dr. Ravindra, in investment, it is advised, have patience. Patience is the key. Let your money grow. Let your investment grow and earn more return. So what I want to emphasize here is that investment is the only way through we can make money. Because whatever we do, whatever efforts we make and earn money, that is one part only, my dear friends. But unfortunately, Dr. Ravindra, my generation were not investors. I admit it very honestly. We didn't thought of this channel of making money out of our investments. What thinking we had got, Dr. Ravindra? Arre Baba, it is not our cup of tea. It is a cup of big industrialist, big businessmen. They make money out of their investment. We can't make it. That was again a wrong notion on my part, on our part. We can also make money, rather huge money. I can say with confidence that even a middle class, salary class person can make huge money out of their investment, provided he's regular, he's consistent, he's aware. So you have to invest, because investment only generate money for me. But unfortunately, Dr. Ravindra, we did save some money. We did invested our money in some product, because in my time, Dr. Ravindra, if you remember, there were only two products available in the market for middle class, salary class person. One was bank fixed deposit, FD, bank FD, and other was life insurance policy of LIC. That was the normal products available for the middle class, salary class person. But my dear friends, I want to tell all of you, both are not investment product at all, unfortunately. But we didn't have any idea of all the such things at that time. Why FD is not investment product? I just want to tell you one thing. And Dr. Ravindra, kindly give me your permission to take your name in this example I want to share with the participant. Very simple example. Suppose Dr. Ravindra has got 1 lakh rupees with him, and he goes for a bank FD with 1 year with a good bank. And bank promises Dr. Ravindra 6% interest or return, whatever you say it, on the 1 year bank FD. After 1 year, when I meet Dr. Ravindra and ask her, sir, what happened to your bank FD, which you had made last year? What I see, there is a celebration at the residence of Dr. Ravindra. He is throwing party to his friends and relations. Why? Arey Baba, I have earned 6,000 rupees as interest income, and bank has given back my money, and I am very happy. These were the thinking at oh, I am very happy. Bank has given me 6,000 rupees. With highest regard to Dr. Ravindra, I want to say, sir, you were not right. Why were you not right? Because of two reasons. The first reason is, during this 1 year, Dr. Ravindra, when you had given your money to the bank, one thing kept happening every day, and that is inflation. Inflation is a norm of our life. every day the prices of the item, goods and services keep increasing. We feel the pinch of inflation every day in, day out. But while analyzing our return, we literally forget it. So inflation is a part of our life. And Dr. Ravindra, just suppose that during this 1 year, the inflation rate was 5% of one. What does it mean? Last year, suppose you had not gone for the bank FD, you could have purchased some item or goods, some services from 1 lakh rupees. Sir, you tell me, would you be able to get same items, same goods and same services after 1 year at 1 lakh rupees, sir? Would it be possible? We all know it will not be possible. Why? Because of inflation, prices of those items, goods or services have increased. And suppose the inflation rate has been 5%. What does it mean? It simply means that whatever Dr. Ravindra could have got last year at 1 lakh rupees for the same goods and same items, he will have to pay not 1 lakh rupees, but 1 lakh 5,000 rupees after 1 year. Am I right, sir? You are saying yes, sir. Now you see the proposition, sir. Bluntly speaking, out of 6,000 rupees interest, 5,000 has been eaten by the inflation. Normally, we don't take this account. We are happy with whatever we get. But my dear friends, please mind it. Majority of the return on investment is normally eaten by the inflation. Majority of it. Sometimes maybe full, maybe 80%, 50%, whatever it might be, but majority of the return is eaten by the inflation. So out of 6,000, 5,000 had been eaten by the inflation. But still, Dr. Ravindra is very happy by nature. He is a very satisfied person. He being Indian, we by nature are very satisfied. What he will say now, okay, sir, let the 5,000 be eaten by the inflation. Still, I have got 1,000 with me out of 6,000. No, sir, there is another problem. And the problem is, most of the return which you earn on investment, Dr. Ravindra, bearing some government schemes, which I will discuss afterwards, on every return, you will have to pay income tax or some capital gain tax. And for FD, if you are not aware, sir, I want to tell you, whatever you earn as interest on FD will be treated as your income. And you will have to pay income tax as per your income tax slab. Suppose conservatively speaking, of course, he must be in 30% bracket, but suppose Dr. Ravindra, in conservatively speaking, you are in 20% bracket. What does it mean? That on 6,000, you will need to pay 20% income tax also. And sir, in my time, rule was same. But we had an impression, let it be, who will come from income tax department to collect this 6,000? So normally middle class people were not including this income in their income tax return and were not paying income tax. But Dr. Ravindra, technology has given thousands of benefits, but one disadvantage also. Now, system is integrated. The moment Dr. Ravindra get credit of 6,000 interest income in his bank account, income tax people will automatically be knowing it. System is integrated. Now he can't avoid. He will have to pay tax. So suppose in 20% bracket, on 6,000, he will have to pay 20% income tax alone. What it becomes, sir? 1,200 rupees. Now you see the proposition, sir. You are celebrating interest of 6,000 rupees at your home when you got it. But in reality, my dear friends, out of 6,000, 5,000 has been eaten by the inflation, and 1,200 rupees he had to pay income tax. Did he get anything in reality? Sir, rather 200 rupees has gone out of your pocket. You see the proposition. Honestly, well, normally we don't analyze in that. Arey Baba, whatever he get is good, very good. I got 6% return. It is not 6% return, my dear friend. It is negative return rather. We got nothing in reality. 6,000 was your notional income only. And I want to tell all of you, notional income will have no meaning in future. So, what to do? You must earn some real return on your investment. What is real return? 6,000 was notional return. Then what is not real return? I just take it example forward. Dr. Ravindra, suppose the rate of interest of the bank FD 1 year is 8%. In that scenario, sir, you will get 8,000 as interest income. Am I right, sir? 8,000 as interest income. Again, suppose we presume that inflation is 5%. Out of 8,000, 5,000 has been eaten by the inflation. Again, 20% income tax on 8,000, that is 1,600. You have paid as income tax also. But still, there remains 1,400. 8,000 minus 5,000 minus 1,600. And my dear Dr. Rajendra and all my participants, this 1,400 is real return in the second scenario. In the first scenario, there is no return at all. Rather, it was negative. So what I want to emphasize here, my dear friends, you have to work very hard that your investment earned real return. You should not be satisfied with the notional return. And the formula which comes out of this example is real return equal to notional return minus inflation minus tax liability, if any. So my whole focus should be, every individual whole focus should be that I should earn some real return on my investment. We should try for it. But Dr. Ravindra, have you ever thought why my generation could not earn some real return? We were simply accumulating money. We didn't get some real return. What was the reason? What was the cause? Sir, there was a deep-rooted cause which sat in our mind, not outside somewhere. In the middle class, salary class person, this mindset was totally different. And we were so rigid. I will use the word rigid. What I will say, or what my generation will say, Arey sir, I want to make investment only where there is 100% security. My only concern was not return, very honestly speaking, but the security of my money. Protection of that was a blunder on our part. I again repeat, that was a blunder on our part because my whole emphasis, my generation, whole emphasis was on the protection of the capital, protection of the investment. But my dear friends, you should appreciate, and I think Dr. Ravindra will appreciate, that in most of the investment, risk is there. In most of the investment, of course, degree of risk will vary from product to product. In some product, there is very less risk. In some product, there is highest order of risk. But in most of the products, risk, and what is risk, sir? Dr. Ravindra, sir, risk is that I might lose my money, or I didn't get any real return. That is also a risk. So we were averse of risk taking. No, we will not take a risk. And not myself, Dr. Ravindra, whole middle class families were very clear. Arey Baba, we are not bothered about the return. We are bothered only about the safety of our money. So what I want to tell you, my dear, particularly young minds, I want to tell, in majority of the investment products, risk is there. Please understand and appreciate it. Because once you appreciate, then there may be a thought come in your mind, Baba, how to manage my risk? Because then everybody will feel that if investment, because the purpose of investment is very clear. I again repeat, my investment should make as much money as possible for me, very clearly. And my investment should give me real return. I have explained what real return is. So my investment should get maximum real return. So please understand and appreciate that in investment risk is there. But once you appreciate and accept it, then the second question, Dr. Ravindra, which will come in our mind is how to manage our risk. How to minimize our risk. That thought will naturally come in our mind. Yes, there is a way out through which we can manage our risk, my dear friends. Very simple two-word formula I am sharing with the young participants. If they wish, they can note it down. Very simple thing. Only two-word formula, and that is think, understand, and invest. I have used only two words, Dr. Pradeep. Think, understand, and invest. The first word which I have used is think. What I have to think. Two things I have to think about myself. The first and foremost thing is, what is my risk-taking capacity? How much risk I can take? And Dr. Ravindra, every individual has got different risk appetite. Every individual. Because your risk appetite depends upon your age, your family circumstances, your family obligations, and a lot of other things as well. So the first thing I have to say is, what is my risk appetite? And one more thing I want to tell Dr. Pradeep here, your risk appetite will keep changing with the age. That is why those who are young, Dr. Ravindra, I tell them they are very lucky. They are very lucky that they are young. Why? Because they have 30, 40 years to go. If they start investment, there might be some mistakes. Naturally, we make mistakes in our life. So in investment also, we might make some mistakes. But Dr. Pradeep, you have got 20, 30 years to go. But unfortunately, Dr. Ravindra, that luxury I don't have because of age. That is why I keep emulating and keep encouraging youngsters particularly. Think and appreciate the importance of risk, understand the risk, and then take the risk. And risk should always be calculated in investment. It should not be a blind risk. And what is blind risk, sir, Dr. Ravindra? Lot of messages come to you daily now. Invest in this share, invest in that product, you will get high return. These are all frauds. I am using very harsh word for all these things. People don't know what the share is. People don't know what the company is. But they're clamored, oh, it is giving 40% return every year. I should also invest. That's a blunder on our part. Before investing a single penny in any of the product, please understand the product as such and broadly appreciate and compare whether your risk appetite broadly matches with the risk which is inherent in the product. If it is there, go for it and invest it. Otherwise, simply avoid it. So what I want to tell you, please think of risk management very prudently while taking all your investment decisions, and your risk can be managed by understanding the concept of risk and understanding the concept of your risk appetite. One more thing I want to tell you, and Dr. Pradeep will agree with me. Why we save? Why we invest, sir? Why? Why we take so much of pain? Why we sacrifice too much today for tomorrow? What is the reason? Because, Dr. Pradeep, we all know that in future we will be needing huge money for bigger things in our life. And that money might not suffice through salary only or through the profession, business, whatever it might be. That is why we save today. We all know that we will be needing huge money. And that is why we save today for tomorrow. But how we can systematize our savings and investment so that we should have money when I need the money? This is possible. And for that, I want to take the name of Dr. Pradeep. I just want to give an example through you, sir, to all the participants. Next Sunday, Dr. Pradeep, sit with your family at home. Take a paper, and on the paper, make 3 columns. In the first column, you jot down what are the major things in your life which you will be doing. Normal middle class, salary class person, if I say, what are the, and this we can also term as milestones in our life. The first milestone is marriage, for which we will be needing huge money. After that, every family wants to have their own house. Again, good money will be required. Then purchase of 4-wheeler, not a big thing nowadays, but still we will be needing money. After that, Dr. Pradeep, there is a new phenomena in today's generation, which was not a norm in our generation, going on vacation. Every family now wants to go on vacation with them regularly, maybe 3-4 years every year. And not only domestic vacations, international vacation as well. For that, you will need huge money. After that, one most important thing will happen in your life. That is higher education and professional education of children. And Dr. Pradeep, you will agree that every Indian parent hiddenly or overtly or covertly wants whatever I could do, my children should do. And for that, they want to give them the best higher education and professional education. But for that, huge money will be required, sir. And after if their education is over, in the Indian context, marriage of the children. Again, normally parents take care of marriage expenses to the children. And last but not the least and most important thing, Dr. Pradeep, leading a comfortable retired life. Those who are in government service getting some pension, they are very, very minor portion of the society. Majority of the people don't work in government. They work in private sector, or they have their own business, or they have their own profession. So how they will manage their retirement life? Retirement life is very, very important. And for that, Dr. Pradeep, you will need crores of rupees, I want to warn you. And if you are in private service, from where you will get it? So for retirement life also, you will need to have a huge money. So take a paper. In the first column, jot down all the milestones right from marriage to retirement life. And in between, if I have forgotten something I have not mentioned, you are free to include that milestone also. In the second column, now keep giving time frame when this milestone is likely to happen. Suppose somebody is not married, likely to marry after 2 years, put it 2 years against marriage. Like a 2 year, 3 year, 5 year, 10 year, 15 year, 25 year, last 30, 35 year retirement life. Again, estimate only, precisely, of course, it is not possible, give them an estimate. And last column, which is very important. Now start assigning money which you will be needing for each milestone. Suppose somebody say that I will need 5 lakhs for my marriage. Very conservatively speaking. Okay, put it 5 lakhs against marriage. But Dr. Pradeep, it will not be 5 lakhs. Today he might be thinking that it is 5 lakhs. But if marriage is to going happen after 2-3 years, because of inflation, it will go from 5 to 550 lakhs, 5.50 lakhs, or even more than that. Two bigger things I want to tell you. And Dr. Pradeep, I want you to be scary. I want you to be scared. Not you, but all the participants. Two very important things I want to tell you. Dr. Pradeep, you will appreciate that a good MBA degree from a reputed institute, 2-year regular course from MBA degree, today costs around 20 lakhs. Am I right, sir? Around 20 lakhs. Dr. Pradeep, when your children will go for higher education after 25 years or more after 20 years, you might not have thought. The MBA degree, which is costing around 20 lakhs, will cost not less than 2 crore rupees after 20-25 years. Because of inflation. We never thought like this. Let it be. Whatever in our luck, they will get it. There is no luck at all, my dear friends. We have to work hard for our prosperity. There may be few lucky people out of crores, but 99% of the people have to work hard for their prosperity. So 2 crore rupees, one child only, and perchance you have got 2 children, 4 crore rupees only for the higher education and professional education of the children. And one more thing I want to tell you. Suppose, suppose you are 30 year age today, and you say that I am managing my monthly expenses with around 30,000. Normal middle class I am talking about. Normal. Absolutely normal middle class. After 30 years, Dr. Pradeep, when you get retired, you might not have thought the monthly expenses today 30,000. After 30 years, same standard of living, no extravaganza. Your monthly expenses will be not less than 2 lakh rupees per month because of inflation. Normally, we don't think in such terms. Let it be, we will see at that time. What you will see? What you will see if you are not alert today, what you will see tomorrow? So that is why I am telling you 2 lakh rupees per month in the first month of retirement. that will literally be 25 lakhs per year in the first year itself. From where it will come, Dr. Pradeep? Because you have retired, your salary or whatever income you had, which was being credited to your bank account, will no more be coming to you because now you are retired. From where 2 lakh rupees will come? That is why I keep telling in my sessions, please be serious in developing a huge retirement corpus for your retirement life. And one relevant thing I want to tell my dear participant, Dr. Pradeep, you will also agree. When India got independence, the average age of Indian was only 47 years, which has now risen to 71 years. What does it mean? It simply means, sir, that even after retirement, you will be living for next 20, 25 years. From where the money will come? Because the regular income has gone. That is why I keep emphasizing every individual must develop huge retirement corpus, or rather he should start working on his retirement corpus right from the first month when he start earning. Because huge money will be required. And what should be the retirement corpus? A thumb rule is there, my dear friends. I want to tell you. If you want, you can note it down. Your retirement corpus should be minimum 20 times of your annual expenses in the first year of retirement. I again repeat, your retirement corpus should be minimum 20 times of your annual expenses in the first year of retirement. We have just calculated around 25 lakhs rupees per first year of retirement multiplied by 20. What it become, Mr. Pradeep? 5 crore rupees. 5 crore rupees only for the retirement. 4 crore rupees for the higher education of children, then house, then vacation, lot of other things. A normal middle class, salary class person, Dr. Pradeep, who is around 30 today, will need around 10 to 12 crore rupees for his or her milestone only. From where it will come, Dr. Pradeep? Dr. Pradeep was telling me before this session, okay, sir, I have made a way. Amitabh Bachchan KBC is on nowadays. I will go there and win first prize of 7 crore rupees. Okay, let it be. Congratulations to you. But only one will do. Only 4, 5, 10 will do. What about the crores of others? How they will have 10 to 12 crore rupees rise? Yes, now I want to give confidence to all of you. And even your students, I want to give confidence. Every individual middle class I am talking about can have 10 to 12 crore rupees or 15 crore rupees for his or her milestone, provided he start working on this right from the first month when he start earning. That is the most important thing. And the chart which we have just prepared, Dr. Pradeep, it is technically called financial plan. This is the financial plan, and I am of the firm opinion every individual must have his or her financial plan. And Dr. Pradeep, it is not a rocket science. Every normal middle class, normally educated person can prepare his financial plan, or rather, I give you importance here. I again repeat, every individual must have his or her financial plan. Even a student, I want to tell you, when you start earning after 2, 3 years, please prepare your financial plan in the first year itself. And what is the benefit of financial plan, Dr. Pradeep? The most important benefit is now you will have your financial goals defined. Broadly, picture will be before you how much money you will need, for what time, and for what purpose. So financial plan will give you a broader perspective about your needs of finances in your life. And psychologists say, Dr. Pradeep, those who have defined their goals in life work hard. So define your goals. Define your goals, including your financial goals, and that can be done through financial plan. So I again repeat and give emphasis, every individual should have his financial plan, and it is not a rocket science. Every educated person can make his financial plan, but simply making will not do, sir. That is the first step only. Now start working on it. Now start working on it. So simply making financial plan will have no meaning at all. But you have defined your financial goals. Now start working on it. Every year you should review and analyze whatever you have achieved, how much you lacked, what was the deficiency. If deficiency, work more harder in the second year. Keep analyzing your financial goals in the context of the money which you have accumulated every year. So review of your goals every year is equally important. So please keep doing it. So financial plan is very, very important. And the last thing about investment, and Dr. Pradeep, that is eighth wonder of the world, my dear friends, and it is called power of compounding. Power of compounding is eighth wonder of the world, my dear friends. And in investment, Dr. Pradeep, what is power of compounding? Simply speaking, you will have to make a promise with yourself, not with others. Make a promise with yourself. And what is that promise? Very simple promise, Dr. Pradeep, but very tough. What is promise? That whenever I will save and invest the money, and whenever I will get return on my investment, naturally you will get return. Today or tomorrow, when you start saving and investing, definitely you will start getting return. May not be today, Dr. Ravindra, maybe tomorrow, maybe after 1 year, maybe after 2 years. You will have to make a promise with yourself, Dr. Pradeep, that I will never, 3 times I'm using the word never. I will never consume the return. What I will do, I will keep reinvesting the return. And not once, but regularly for the next 15 to 20 years. It is very tough, Dr. Pradeep, but there is no option. There is no option. We have to religiously follow power of compounding. And power of compounding, I simply again repeat, nothing. You have to keep reinvesting your return on investment every time. And return might be 500 rupees, might be 5,000 rupees, or might be even 5 lakhs rupees. Money amount doesn't matter here. Only thing is your commitment that I will keep reinvesting my return. And if you do, Dr. Pradeep, or rather there is no option, you have to do it. If you do it, after 15, 20 years, you will have huge money in your hands. Because power of compounding is a magic. And Dr. Pradeep, it is eighth wonder of the world. It is, so please, I am requesting all of you, please religiously follow power of compounding in your investment. It is not easy. I appreciate. Suppose Dr. Pradeep has promised with himself, not to me, Pradeep, with yourself only. You have promised that I will never touch my return. I will keep reinvesting it. And after 5 years, suppose you get 5 lakh return on some good investment. What you have promised? I will reinvest 5 lakh rupees. But Dr. Ravindra, whole family will be behind Dr. Pradeep. Let it be, whatever promise you have, forget it. You will go to Switzerland now because you have got 5 lakh rupees return. That is very natural on the part of family. But on your part, Dr. Pradeep, no. This 5 lakh will be reinvested. We will definitely try to go to Switzerland, make extra efforts. That is a different story. But this 5 lakh will be reinvested. So this promise you will have to make and keep it. And if you keep it, I tell you, I again repeat, down the line after 15, 20 years, you will have huge money in your hands. So my dear friends, please religiously follow power of compounding. Dr. Ravindra, I know he's not happy. He's just conveying me, sir, you have taken so much of time for these basic things. But Dr. Ravindra, my submission is that unless and until we understand the basics of investment philosophy, basics of investment metrics, we will not be successful in the investment. So please, I encourage young people, now the time has come that we have to be investor. We have to be invested in real sense because we can make money, Dr. Ravindra, only through investment, or rather huge money we can make. So please understand these basic things which I have just discussed with you. Last 5-10 minutes, I will discuss where to invest, because that is equally important. And more so when those who are already earning, like Dr. Pradeep, he might be more interested. Sir, you tell me, sir, where to invest? You have taken so much of my time in basic things from saving and investment. Very briefly, because students might not be interested at this point to know about the investment options. But Dr. Pradeep and those who are already earning might be equally interested to know where to invest. The first category, Dr. Pradeep, where you can invest is governmental small saving scheme. Government of India has announced some very good scheme for the middle class, salary class person. And the first scheme, Dr. Pradeep, which I always mention with more emphasis, it is called Public Provident Fund Account, PPF. And Dr. Pradeep, if you have not opened account in PPF, you have missed something. Because I feel personally, every middle class, salary class person must have a PPF account. And not only in his name, Dr. Ravindra, but even in his spouse name or family member's name. We must have a PPF. PPF is one of the very unique scheme, Dr. Pradeep, which is tax exempt. It is very rare. Normally in government scheme, government take tax on the return. But in PPF, there is no tax at all. The PPF scheme is of 15 years. I just very briefly speaking, you can open a PPF account in any of the bank or post offices. Every month, every year, you have to deposit maximum amount is 1.50 lakhs. And one more thing I want to tell you, that beyond 15 years, Dr. Ravindra, you can extend this scheme by a period of 5 years, 5 years, and 5 years. So there is no limit. You can keep extending it for a tenure of 5 years. I just give an example and then go ahead. Suppose, Dr. Pradeep, you at the age of 30, open a PPF account and you are depositing every year religiously 1.50 lakhs, which is the maximum limit. And that too, Dr. Pradeep, at the beginning of the financial year itself. Mind it. Financial year simply means from 1st April to 5th April, try to deposit 1.50 lakhs in one go every year. When you become, because the scheme is 15 years, so when you become 45 years, don't close the scheme. Extend it for 5 years. Again, when you are 50, extend it for 5 years. Again at 55, extend for 5 years. And continue depositing 1.50 lakhs every year in this PPF account. The present rate of interest is 7.10%. Dr. Pradeep, when you will be at the age of 45 years, the corpus under this scheme will be 44 lakhs, including interest. But you are wise enough, you have extended it 3 times. So at the age of 60, the corpus will be 1 crore 72 lakhs. In the first year, it was only 44 lakhs. But in the next 50 years, you become 1.72 crores. How? Power of compounding. Power of compounding, magic came into play. Because your interest also started earning interest. It kept included in the principal. Next year, principal became interest plus interest. Oh, principal plus interest. So this is a magic. So I want to tell you, please do open a PPF account in minimum. Second, I don't have time, so I will just mention the name of the schemes of government only. Second is National Savings Certificate, NSC, where you can get the details from a website of post office. Third one is Kisan Vikas Patra. Kisan Vikas Patra. Mr. Sabjari writing on the chat box also. Kisan Vikas Patra. Fourth one is RBI bonds. RBI keep issuing bonds to the public and there is no limit. And you are earning literally 7.80% to 7.90% interest today. Then government securities. Government also keep raising loan from the public, and it is paying almost 8% interest. So government, earlier it was not easy for the middle class, salary class person, Dr. Ravindra, to invest in government securities. But before 2 years, RBI has started a dedicated website. The name of the website is RBI Retail Direct. RBI Retail Direct. And in the month of June, RBI has also now started an app also. You can download the app, RBI Retail Direct, give the information which they want, and then you can start investing a small amount in government securities. Then post office and banks have got a good number of savings scheme where you can look at. And lastly, government big institutions like National Highway Authority, Railways, BHEL, ONGC, Coal India, they also keep raising loan from the public and giving almost 8% return on it. So these are all governmental scheme. And Dr. Pradeep, there is one advantage and there is one disadvantage. The advantage is no risk at all. Whatever government promises you, government will give you. Whatever. But disadvantage is, Dr. Ravindra, there is hardly any real return. Because you accept PPF. If you subtract inflation and tax liability, there hardly remains any 1 or 2% return on it. So most reasonable return, but 100% security. But those who are young should not 100% rely on government scheme. But those who are above 60, my advice is totally different. 100% your investment should be in government scheme only. Because after 60, you can't take risk. But at the age of 30, Dr. Pradeep, if you don't take risk, then who will? So it directly related to your age. Those who are young should take off maximum risk because your intent is to earn maximum real return. But when you cross 60, my intent has changed now. No, Baba, no, I'm not interested in much return. I'm interested in protection of my money, safety of my money. So these are government. One more scheme I want to tell all of you, that is government scheme only, but that is only dedicated to girl child. And Dr. Ravindra, if you have got a girl child at home, of any of the participants have got girl child at home, or your relations have, your friends have, please tell this about this scheme. The name of the scheme is Sukanya Samriddhi Yojana. Sukanya Samriddhi Yojana. This scheme has been devised only for the girl child. And one more condition is here. The girl child age should be less than 10. After 10, Sukanya Samriddhi account can't be open. So if you have a girl child at home whose age is below 10, or if you have got more than one girl child, you can open 2 accounts for that. This is the best scheme for the government of India, because now government of India wants that every girl should face no financial problem for her higher studies, and her parents should not face problem for her marriage. That is why this scheme has been introduced. And government of India is giving maximum interest in this scheme, that is 8.20%. Except in senior citizen scheme, Dr. Ravindra, no other scheme of the government of India is given 8.20%. And here again, the tax benefit is also there, just like PPF. No tax liability at all. Whatever girl earn interest, that is tax exempt. So please open a Sukanya Samriddhi account. So these are the governmental scheme I have just mentioned. Second category is real estate and property, where you can invest. We all know, Dr. Ravindra might be an expert of real estate and property. I am not. I am not. But we all know that real estate is also one of the investment options. Of course, there is plus point and negative point, both are there. Risk is there. Money is stuck up. If the market is down, you can't sell the property when you need the money. But this is an option I want to tell you. Third option is gold, where we can invest. And historically, Dr. Ravindra, Indian have been investing heavily in gold. And this is not today, for centuries together. For centuries together, gold was a passion, particularly for our female members of the family. When you talk to them about the gold, what they will say? What to discuss about the gold? Purchase it, na? That's all. No discussions at all. Discussions are wastage of time. Purchase. So historically, we have been, our female members have been purchasing gold in physical form, Dr. Pradeep, by purchase of jewelry. Normally, jewelry. But Dr. Ravindra, when you go home today, or if you are at home, you try. Of course, you may not be 100% successful, but you please try to convince your female members of the family that investment in gold jewelry is a losing proposition. It's why? How it is? Suppose, Dr. Pradeep, suppose a lady purchased some gold jewelry today at 10 lakhs rupees. Suppose. After 10 years, she thought now the design has changed, new designs have come, I should replace it with the new design. She goes to the jeweler, he says that I had purchased this much of gold jewelry from you, I want to replace it, I want the new one. What he will say? Yes, ma'am, you had purchased from us, we will take it back, but we will deduct 30 to 40% making charges. 30 to 40% making charges. That is why I keep telling in my session, now the time has come that you should at least try, Pradeep, Dr. Pradeep and Dr. Ravindra. I don't know how much you will successful, but at least you should try to convince your female members of the family, avoid investing in gold jewelry. Instead, invest in digital gold. Now, digital gold is also available. You can invest in digital gold. That is the best option available nowadays, including sovereign gold bond. Because in digital gold, you don't take physical gold. Only you invest in the money. After 10 years, whatever appreciation in the gold price, you will get as a profit. So please try to invest in digital gold, including sovereign gold bond. And lastly, where you can invest is, that is called security market, share bazaar. But Dr. Ravindra has told me very clearly before the start of the session, sir, don't talk much about the security market. It is sheer speculation. Most people think like this only. Share bazaar is nothing but speculation. But I want to tell Dr. Ravindra, to all your participants, particularly young ones, share bazaar is not a speculation, Dr. Pradeep. Of course, it is a bit speculation also, I do admit, but it is purely a knowledge-based market. It is purely a knowledge-based market. And if you don't have knowledge of the market, please never invest in security market directly. This is my personal advice or experience, whatever you say it. So if you want to invest in security market directly, first have knowledge. Because market is purely knowledge-based. And one thing more I want to tell you, Dr. Pradeep, security market has given 15% average annual return during last 35 years, which no other product has given. But again, I am not encouraging you to invest in security market. What I am emphasizing here is, please first have knowledge of the market, only then think of investing in security market directly. But there is indirect way of investing in security market, including not only security market, beyond also, and that is called mutual funds. Actually, Dr. Ravindra has not given me much time today. So next time when he will give me 2 hours, we will talk in detail about the mutual funds. But very briefly, 5 minutes, I will tell you what mutual fund is. Mutual fund is nothing, Dr. Pradeep, but indirect way of investing. You are not directly investing. You are giving your money to some experts. Naturally, Dr. Ravindra will ask me, sir, I am also an expert. Why I should give my money to some other expert? Sir, Because of three reasons. You may consider giving your money to the expert. Number one, I don't have knowledge of the market, but the people whom I am giving my money are the experts of the market. Secondly, I don't have time. I have got full-time job, then family to look after, and investment is a full-time job, my dear Pradeep. Mind it. It is not a casual thing. It is very serious thing. So if you don't have time for the investment, you give your money to the experts. They have got 24 hours to manage your money because they will get some commission or fee set for that. That is, they are not social workers. They will get some commission. But it is the best way of giving some commission to those who are experts. Then investing blindly. Then investing blindly. So what I want to tell you, I don't have time. And thirdly, I don't have any experience of investing. The people have got 25, 30-year experience in investing. That is that they are better placed to take better investment decision. And one more thing I want to tell Dr. Pradeep and Dr. Ravindra sir, mutual experts which are called fund managers, they are supported by a huge research team. They don't independently take any investment decision. A team of 100, 200 researchers work on it first, about the security, about the investment, about the company, about the sector, a lot of things they do. And after their research conclusion, they give it to the fund manager, and then he take a call and invest your money. So mutual fund is an indirect way of investing. And there are two different and unique features in mutual fund, Dr. Pradeep. The first thing, Dr. Ravindra, in mutual fund is, for every individual, mutual fund schemes are available as per your risk appetite. Suppose Dr. Pradeep says, I can take high risk, I am quite young. Then there is a different schemes available for you. But Mary Florence sir say, no, bhai, I am relatively mature person now. I don't take any risk. There is a different schemes available for him. And Dr. Ravindra is in between. He says, I want to take some risk because I want to make some money, but at the same time, I don't want to take much risk. So for him, different schemes are there. So in mutual fund, schemes are available as per your risk appetite. Different schemes are available. And likewise, Dr. Ravindra, schemes are available in mutual fund as per your time horizon of investment. I don't know whether Dr. Pradeep is aware or not, Dr. Ravindra sir. In mutual fund, schemes are available where you can invest your money only for one night. Today night you invest and tomorrow morning you withdraw. There will be some return. In mutual fund, schemes are available where you can invest your money for 1 week, for 1 month, for 3 months. Liquid funds are there. If schemes are available where you can invest your money for 3 months, 6 months, 1 year, short-term debt funds are available. Schemes are available where you can invest for 1 year, 3 year, 5 year, 10 year, 50 years. So as per your risk appetite, as per your time horizon of investment, mutual fund schemes are available. Investment in mutual fund is very easy. Everything is online now. Everything is online. Redemption, taking money back in mutual fund is very easy. You can apply for redemption at any point of time and you get the money in one next day. And one more unique feature is there. Dr. Ravindra sir, tell me one thing. Suppose you open a bank FD of 10 lakhs rupees with a bank for 1 year. And after 6 months, you get some emergency, need some 2 lakhs rupees. He goes to the bank and tell bank manager, I need 2 lakh rupees out of my bank FD of 10 lakh rupees. What manager will tell Dr. Praveet to him? Sir, you can't withdraw 2 lakh rupees. Either you take 2 lakh rupees loan against the FD or close the FD of 10 lakh rupees, withdraw 2 lakh rupees, make fresh FD of 8 lakhs rupees. Am I right, sir? This is the proposition. But in mutual fund, suppose Dr. Ravindra has got a corpus, develop a corpus of 1 crore rupees over a period of 5 years, 10 years, and he withdraw 10,000 rupees only. He can withdraw. remaining amount will keep invested. So in mutual fund, investment is very easy, redemption is very easy, and the best way of investing in mutual fund, Dr. Pradeep, for middle class, salary class person, that is called SIP, Systematic Investment Plan. And Dr. Ravindra, SIP is a magic for middle class, salary class person. And SIP is nothing. It is just like a recurring account which you might have opened with the banks and post offices. Every month you are investing. Minimum amount of SIP, Mr. Pradeep, is 500 rupees only. For those who are earning, for students, it is even 100 rupees nowadays. Start SIP of 500 rupees only. Continue with the longer period, you will have huge amount. I just give you an example, and then I will take, I will not take much of your time now. Suppose Mr. Pradeep, your age is 20, just for example's sake, and you start an SIP of 500 rupees only in a good equity fund. And you continue with the SIP for 40 years. Every month you are investing 500 rupees, and you need not go to the bank to invest every month. You simply have to give a mandate, or simple procedure is there. Every month money will deduct from your bank account and will be reinvested every month. You continue with the SIP for 40 years. I presume a return of 12% only, whereas the security market, Dr. Ravindra has given a return of 15%. But I am presuming a return of 12% only. After 40 years, Dr. Pradeep, you will have a corpus of 47 lakhs of the SIP of 500 rupees only. But there is another good effective way to make more money, and that is, Dr. Pradeep, increasing your SIP every year. Suppose, Dr. Ravindra, you started SIP with 500 rupees. Next year, you increase it to 10%, that is 550 rupees. Because your income will keep increasing, your salary will keep increasing. So next year, you increase the SIP amount from 500 to 550. Third year, again add 10% of 550, that is 610 rupees. Every year you are increasing your SIP. It is called step-up SIP or top-up SIP. Every year you are increasing for 40 years. And if you do it, Dr. Pradeep, your corpus for the flat SIP of 500 rupees was 47 lakhs only. But if you step up SIP every year by 10%, your SIP corpus will be 1 crore 92 lakhs after 40 years. That's a magic. And it is mathematical calculation, sir. I am not giving you any wild figures. It is a mathematical calculation, compounding return of 12%. So what I want to emphasize here, now the time has come, my dear young friends. Every young people must have an SIP, just like a PPF account. I mentioned a PPF account. So every young people must have, those who are earning, minimum PPF account and minimum one SIP. And I know, Dr. Pradeep, people are having not one but 5, 6 SIPs running together. And all SIP has got a target. One SIP for purchase of house, another SIP for going on vacation with the family, third SIP for higher education of children happening after 25 years. You started working on it today itself. Fourth SIP for marriage of children, and last SIP for your retirement corpus. So you can have multiple SIPs. And rather, I will tell you, think of starting SIP as early as possible. Continue as long as possible. If you want to reap the benefit of the SIP, please start early and continue for the longer period. SIP is a magic. So what I want to tell you, how you know about the mutual fund, what mutual fund is, because next time when Dr. Ravindra will give me time, we will discuss for minimum 2 hours on mutual fund itself. But how to get the basic knowledge of the mutual fund, I'm just sharing the name of one website. Please note it down, all participants, particularly young one. Please note it down. Mr. Sabjara, write in the chat box also. Name of the website is Mutual Fund Sahi Hai. Mutual Fund Sahi Hai. This is the name of the website which has been developed by the AMFI. And every information given here is authentic. It is not hearsay. 100% authentic. And information is available in every language. Hindi, English, Uriya, Telugu, Tamil. Every information, these information. Please do visit the website. Devote some time, Dr. Pradeep. It is your money ultimately. It is your money. And you should be very serious before investing, I want to tell you. So devote some time, visit the website, take your time. 1 month, 2 months, okay. Heaven will not fall if you don't make investment today. Make it after 2 months, no issue. But before starting investment, you should be 100% clear what you are doing. So visit the website, get the knowledge, how to start it, when to know, how, everything is available there. Smaller videos are available, 1 minute, 2 minutes. You will get better knowledge of all these things. So please visit the website and start investing. Last thing I want to tell you, Dr. Ravindra sir, with your permission and with your blessings. Last 2 things I want to tell you. Never put your hard-earned money in Ponzi scheme, chit fund and committees. This is great fraud going on in our country. Lakhs of people, because of greed only, they put their money in Ponzi scheme, chit fund and committee, and they lose the money. So please, Dr. Ravindra, you are working at the social front also. I will request you, all of you, whenever you meet people, particularly the segment of the society which are not so educated, keep telling them, my dear friends, never put your money in Ponzi scheme and chit fund and committee. You will lose your money. If you don't have knowledge, no problem. Put your money in bank and post offices. At least your money will be safe. If you don't have knowledge, no problem. Put your money in bank, post office, your money will be safe, but never invest in Ponzi scheme and chit fund committee. And last 2 sentences, and that is the crux of my session, Ravindran sir, I want your blessings. Prosperity is your right. Every individual has got right to be prosper, Mr. Pradeep. And my definition of prosperity is very simple. It is not to become a Mukesh Ambani or Adani. That is not my prosperity definition. My definition is very simple. I should have money for my needs. I should have money for my comfortable life. I should have money for the giving best life to my family. I should have money to give best education to my children. I should have money to take care of my family obligations. I should have money to take care of my retirement life. And last but not the least, I should have money for some of my dreams. Every individual has got some dreams. For that too, I have money. That is my prosperity. And Mr. Pradeep, with due respect, prosperity is your right. It is not a begging anybody will give you. It is your right to be prosper. But prosperity is not luck. Unfortunately, we Indians rely much on luck. Arey Baba, jo luck mein hoga, sab milega. No, nothing will come on your luck. Bearing a few people out of crores. Forget about them. We have to earn our prosperity by our efforts. We can be prosper, Mr. Pradeep, only through efforts. Don't rely and don't wait for luck to play. Forget about the luck. Start working on your prosperity. Make sincere efforts. And if you make it, I can give you confidence. Down the line, you will be prosper. So nobody can stop you. And if you are not prosper, Mr. Pradeep, after 20, 25 years, please mind it what I am saying. Don't blame others. You are the only responsible person for if you are not prosper after 20, 25 years. Never blame others. Because we always try to blame others for our failures. I was, my friends were not good. I was not from a good family. I didn't get the good advice at the right time. These are all bogus things. We are making excuses. Please don't make excuse. Make efforts. And if you make efforts, you will be prosper. And last thing, Dr. Ravindra sir, there may be one or two participants in this session, maybe one, should not be, but maybe 1 or 2% who might think, Mr. Pradeep, that they are not from rich family, that they are not from wealthy families, or bluntly speaking, they think that they are from the poor families. And Ravindra sir, I want to tell them very clearly, birth is not a curse at all. Wherever we have got birth, forget, matter ends there. Because we are born, we are already there. Birth in a poor family is not a curse at all, my dear friends. But Mr. Pradeep, living as poor and die as poor is a curse, which we all can avoid by managing our money right from the day we start earning. And if you do, you will be prosper. This is my promise. With my confidence and experience, I can say to all of you. And thank you very much for giving me opportunity. Thank you very much.
Thank you, Sharmaji. It was really very insightful session. In fact, as you rightly said, we lack basics. We don't understand basics properly. That's the reason, we are having challenges in savings as well as investment. And as you rightly pointed out, the way we were traditionally saving was not yielding and real income. It was only nominal income that many of us have been doing mistake of, either keeping it, saving it at our homes or keeping safe in the fixed deposit. So that is also very much essential now that we have more avenues opened up, like Sharmaji has already mentioned. So we think we need to think new avenues. We need to be open for new avenues of investment. And as also mentioned, there are a lot of youth population. Our majority of the population consists of youth, and especially across the world also, when we look, the youth has greatest potential for, earning as well as savings. So a lot of, through that savings, we can also invest. There is a huge potential in investing also. Now, as Sharmaji has rightly, mentioned, you can start investing as early as possible. Start with 100 rupees, as Sharmaji has rightly, given us the direction how to start investment. You can invest in SIP, systematic investment plan. Start with 100 rupees. Today, let's take the initiative from now itself. I think Sharmaji would take 1 minute to enlighten us how to start and, how to open an SIP account, so that, everyone can start today. Let's take a pledge that we'll start saving from today itself. Open an SIP account if you don't have one, and, start investing. 100 rupees is not a big, amount, but slowly, gradually, we can start increasing our investment. And I will hand over session back to Sharmaji. Then I will give other remarks, how to open SIP account and, how to start investing.
Any question from any participants? I will welcome question from the participants. If anybody has got some doubt about the subject, if anybody has got some query, what we have discussed today, they are welcome to ask the question directly. We will unmute them. Just raise your hand. We will unmute them. And please come forward and ask the questions.
Yes, dear friends, students, colleagues, feel free to unmute yourself or raise your hand, and feel free to share your feedback or observations or queries. Yeah, Nusrat Irfan.
Sorry to interrupt this session. I won't wish to take much time on this. I'm learning. I'll take a time that in SIP to invest in regular or direct SIP funds.
What is your question, Mr. Nosat?
To start in a regular or Direct SIP investment, sir.
Better it will be if you start in direct mode.
Okay, sir. Thank you.
Direct simply means you are going to the website of the mutual fund company where you are starting SIP directly, giving your
Okay, sir.
information, start SIP.
Okay, sir.
And in regular, so if you go through regular mode, some commission will go to the agent, a mutual fund distributor. So please mind it. Over a period of time, there may be a substantial amount which you might be paying to the mutual fund distributor if you go through regular mode. But if you go through a direct mode, you will be saving a lot of money. So my preference will always be go for the direct mode.
Okay, sir. Thank you for sharing your valuable insights with us.
Thank you, my dear. God bless you. God bless you.
Thank
Yes.
you.
Any other participant?
Thank you, Nausadji. Others, feel free to unmute yourself or raise your hand. We can unmute from our side.
Sir, one question, what you feel about trading market? Is it viable for small investor?
Not at all. Not with emphasis. And I'm bluntly speaking, trading is not a cup of tea of the middle class, salary class person. Please avoid it. Please avoid it. Because it is for the bigger investors, not for us. And SEBI has come out with a report, Dr. Ravindra, in 2 months back, that 96% of the retail investors have lost money in F&O. 96%. And this is a clear warning to those retail investors who are still in F&O segment. Please avoid it. And one more thing I want to add here, be a long-term investor. If you want to make money in security market, be a long-term investor. And my definition long-term, Dr. Ravindra, is minimum 5 years, maximum 50 or 60 years, but minimum 5-year investment should be there to make the money. And one thing I want to tell you again, repeat, I have just mentioned, security market has given 15% annual return during last 35 years. And just more example, Dr. Ravindra, I want to tell you, this BSE Sensex started in 1970 at 100 point only. And it is now 82,000 literally. For those who have invested 100 rupees in 1970, their 100 rupees has become 82,000. So that is why what my emphasis is, be a long-term investor.
Sir, one more question from Sushant. At present time, is it okay to invest in policy plans of LIC?
Personally speaking, again, somebody not feel offended if I say something on insurance. Insurance is not an investment, my dear friends. First thing you must understand, Mr. Pradeep, insurance is not an investment, but it is more essential than investment. I will tell all people, please do take insurance cover, life insurance cover. But that is only through term insurance, TERM, term insurance. Not take money back and endowment. But unfortunately, if some LIC agent is there, he might feel offended because I am taking on his business. That is not my intention. My intention is very simple, to make you aware about the real insurance product. You must have insurance cover. I again repeat, Mr. Pradeep, or rather you should have adequate insurance cover. And what is definition of adequacy? Minimum 10 times of your annual salary. Suppose your annual salary is 20 lakhs rupees. Then ideally speaking, you should have life insurance cover of 2 crore rupees. That is possible only through term insurance. So please do take insurance, but don't think of taking money back or endowment. Yes, Rani Singh.
Good evening, sir.
Good evening.
Sir, is there any criteria, age criteria for starting a SIP?
Yes, yes. I think you have lost some years.
Yeah. Sir,
What have you?
I'm at the age of 45.
Oh, then you have lost much of your time, honestly speaking. I
Yeah.
want to, that is why, ma'am, I want keep telling youngsters, start SIP when you start earning. But still you are 45, you are mentioning. Of course,
Yeah.
you have brave enough to mention your age. Normally ladies don't. But that is a different, jokingly saying. Still you have got 15 years to go. Normally. Well, so please start SIP even at this age, if you are comfortable for investment for long term. Please mind it, minimum 5 years.
So, sir, what would be the minimum amount for me for 15 years?
Ma'am, otherwise speaking, it will be huge amount because you have got very limited years to go now.
Yeah, sir.
So
Yeah.
it depends how much money you need in your hands at the age of 60. Suppose you say I need 5 crore rupees, then it might be a 1 lakh rupees per month. That might not be possible. That might not be possible. So as much as you can, what I want to tell you, as much as you can.
Okay, sir. Sir, nowadays one word is famous SWP. What is
Ah,
that, sir?
yes, yes. Actually, Ravindra Sab might be seeing his watch again and again. Arey, sir, you are taking too much of her time.
No,
I
sir,
have
feel free to take your own time.
SWP stands for Systematic Withdrawal Plan.
Okay, sir.
And I give you an example. Suppose Ravindra San is very wise person. He has already started accumulating huge money for his retirement life. He doesn't have any pension. When he retired, he has accumulated 5 crore rupees for his retirement life, which Ravindra San, you must have. Suppose he has accumulated 5 crore rupees for retirement life. Now, after retirement, he doesn't have any income. Suppose he doesn't, a salary will not come to his account. Now he is retired. He can simply write to the mutual fund company, just request them that whatever amount he wants, regular amount. Suppose he says that he needs 1 lakh rupees per month or 2 lakh rupees per month. He can simply send a mail to the mutual fund company where he has got a corpus of 5 crore rupees that from next month onwards, please keep crediting my bank account on the first of every month by 2 lakh rupees. Again, I say amount he can decide. So, mutual fund company will religiously transfer amount every month in his bank account on first or whatever date he gives. What will be the benefit? On first of every month, he will get 2 lakh rupees, just like he's getting salary. So he is absolutely secure. He will keep enjoying his life as he was enjoying when he was in service.
Okay.
Second benefit will be whatever amount remain with the mutual fund, because he withdrawn only 1 lakh, 2 lakh rupees in the first month. 4 crore 90x rupees are still invested where he will continue to earn return. So he will be withdrawing very small amount for his livelihood, but his remaining amount will continue to earn return for him. So over a period of time, whatever he withdraws will be set off by the return he will continue to get it. So SWP basically is a facility for leading a comfortable retirement life, but for that precondition is that Dr. Ravindran sir and Rani ma'am, to you also, start developing huge retirement corpus, because money will be given only out of your corpus. They will not be paying any money out of their own money. They will be simply transferring your money every month to your account. That will give you comfort to live comfortable life.
Okay, sir. Thank you, sir. Thank you to clear my doubts, sir.
God bless you. God bless you.
Thank you.
Yes, Dr. Guna Sundari.
Hello, sir. Good evening, sir. I am
evening.
Dr. K. Gurasundari from Tamil Nadu, sir.
Yeah, ma'am.
Sir, which one is the best one, sir? SIP or mutual fund in lump sum amount investment, sir?
Ma'am, first of all, SIP is a way of investing only. SIP is not a different thing. It is a way of investing only.
Sir, which one is the best, sir? Mutual fund lump sum is the best or SIP is the best?
No. Ideally speaking, if you don't have lump sum amount, then SIP is the best option. But
Okay,
suppose
sir.
you have a lump sum amount of 10 lakhs rupees, your mother has given you 10 lakhs rupees as a gift, or you have got 10 lakh rupees as bonus for incentive from your employer, then don't invest 10 lakh rupees in one go in any mutual fund. Because suppose
Sir,
today,
1 lakh, 2 lakh is 1 lakh or 2 lakh is okay, sir.
no,
Is it
not okay. But suppose you have got 2 lakh rupees. Today
Okay,
you
sir.
invested 2 lakh rupees in a good equity fund. Tomorrow, per chance, market goes down. Your 1 lakh rupees might become 90,000 in a one day. So you may lose
Okay.
even 10,000 rupees. That is why never invest lump sum amount in mutual fund. The other way around is STP, systematic
Okay.
transfer plan.
Okay, sir.
You are gradually transferring 1 lakh out of 1 lakh rupees every week or every fortnight or every month, 5,000 to 10,000 rupees to the
Okay.
scheme which you have identified. So it is STP. Better go with the STP. Don't invest lump sum.
Okay,
Sir.
sir.
Now
Thank you,
the
sir.
time
Thank you
is
so
right.
much, sir.
Thank you. Dr. Ravindra, time is right to close the session, at least for today.
Thank you, sir. Thank you, all the participants, for the wonderful interaction. And I would request Dr. Jayachandra to share your feedback on the session. And also request Mary Florence or Mr. Pradeep. You can unmute yourself.
Good evening, sir. I'm Mary Florence from Bangalore. Actually, it was a new topic for me, but I learned a lot from this session, sir. I learned how to invest, in what to invest, and it is more a learning and enlightening session for me, sir. Hope to see you in more sessions, sir. God bless you, sir.
Thank you. Thank you very much. God bless you too.
Mr. Pradeep or Dr.
Hello,
Jayachandra.
a very good evening, Surikant sir. It was a very good, very enlightening session, and thank you for also demonstrating it. Me and Ravindra sir, we actually totally enjoyed it, and we also get to know about various new technologies and also the way the mutual funds and also the real investment you have mentioned, and also like what the various schemes, government schemes, many of the people were not aware of it, especially when it comes to retirement and all. Thanks a lot, sir. We want more and more enlightening sessions from you. Thank you, sir.
Thank you very much. On my behalf and on behalf of AMFI, I am thankful to Dr. Ravindra particularly and to you and all your team for organizing this session for participants. And we will be very happy to continue this series. Whenever Dr. Ravindra tells me and whenever you are comfortable, we will definitely take it forward. And more so, I will be more than happy to come to come to Hyderabad, and we will have big physical session also.
Sure, sir. Definitely, sir.
Thank you. Thank you very much. God bless you all.